Hello everyone, I hope you are all doing well today. We are going to look at the FOMC and the trading plan that we may have in different assets today. So we are going to discuss about just one moment. We are going to discuss about the dollar index, US100, NASDAQ, oil, EURUSD, GBPUSD, and New Zealand USD. So we are going to look at them one by one. The first one that we are going to look at is the potential impact that we may face on during FOMC. We have to be very careful today. As you may have seen from the charts, the price is not moving at all, and this is a clear sign that the market is just focused on FOMC right now. No one wants to trade. The trading volume is very, very low. So in the Forex market, I can barely see from 5 to 10 pips in any currency pair to move. So this is very, let's say it's normal situation during FOMC. And the expectation for today that I'm looking at is that probably we may see an interest increase up to 0.25% or 25 basis points. As I have repeated also before from the previous experiences, Fed doesn't like at all to increase the interest rate. So they see this as a very negative impact overall for the economy. However, considering also that inflation is slowing down, I think that they are right in this situation. If they are going to increase the interest rates with larger steps, let's say by 0.5%, then they have to increase also the interest rate projection, and this is not good at all because this is going to impact the inflation rate in higher steps. So it's not expected overall that type of increase. However, what we may expect today is that even despite the fact that they may increase the interest rates as expected, as we can see the consensus, 4.75 basis for 75%, it can happen that probably they will increase the interest rate projection. The interest rate projection is in line with what they can do during the coming months, or let's say for the whole year. However, they repeated that we will interest rate if that is required. So I don't think that they will move back on the dovish side. So probably we may see something flat. We have higher chances to see the USD dollar not to be strong but not to be weak as well. And the Fed, I don't think that is going to give up from the hawkish side. So let's see what is going to happen. The most important part will be related with FOMC. This is what I'm looking at today. So don't focus only what the Fed is going to share at 8 p.m. European time. You should focus on the press conference. This is the most important moment where we need to focus. So with this in mind, we have to move on our charts, on our indexes. The first one that we are going to look at is the dollar index. I'm looking at since a long period of time for the dollar index. We may see that price is just moving within this descending channel. If we are going to move back on the 4-hour chart, we can see very clearly that price reacted several times when price tested this support line here. What may happen also this time, both scenarios are possible. We don't know how aggressive the movements can be during the meeting, so we can see price to test the bottom and after that can create the bullish movement. But the chances are higher also for this bullish scenario. For the moment, we can see a very large corrective pattern. Price is just sleeping in the same position. We can see the dollar index stopped the crash at 110 101.5. This is the minimum that it reached. During these days, the price was just expanding the triangle pattern, and probably today it fits better in this way, how the price is creating. And the chances are equal for both sides from the technical perspective. We may see a breakdown and price can continue lower, and in this situation probably we may see the price to test 100.5 or 100. And for the bullish scenario, we have still hopes as long as the price will develop above this area. So we want the price to develop above 101.5. Let's see, because this is going to make the big difference. If all of this was done, then the price will continue with the bullish move that will happen within the dollar index, and this is the pattern that we may have here. So let's make it in this way. Probably we may see something similar, and after that the price has to decide if it is going to move down or if it is going to increase again. If you have any question, please let me know, because I'm reading also the chat. Thank you very much for joining. So this is overall for the dollar index. It's neither bullish or bearish for the moment, so just let's be careful during the opening of the market. The next one that we are going to look at is US100. This is in a very critical point overall. As you may see from the top that it was reached on November 21, we can see that price is just moving down. And also the lowest level here tested the price zone that this is dating back in July 20, as you may see. Probably the bearish movement is done at this point. However, as long as we don't have any confirmation, we can say that this is done. So everything will be related also from the day movement that we are going to see. On the daily time frame, what is very interesting at this point, and this is getting also risky for the bears, is that we may have this type of pattern here. If price is going to confirm this movement, then we are going to face a potential double bottom scenario that is going to push the price further up. So this is what I'm looking at. For this reason, everything will be related with FOMC. As you may see, US100 is just stopped above the top of this structure, and in this way both moves are possible. So we are in a critical area. The first one can push the price down, the second will push the price up. As long as price is still developing below 12,220, I think that it has chances to move lower again. So everything is possible in the current situation. We can see also this type of pattern here that is taking another shape. If this is going to be the pattern that I'm looking at, probably we may have the bearish movement that will come soon, if price is going to confirm this bearish pattern. It has higher chances to happen, however, it will be very speculative, and everything will depend only on FOMC event. So it depends what Powell is going to speak during the FOMC meeting. Sorry for that. The next one will be oil. This is an analysis that I shared also during some days ago. It was shared on January 24, as I checked before. It was this analysis here for UK oil. Price was within this area, 89. And here we had the bearish movement after the price developed here. So what happened and what may happen again related with oil price? During the energy crisis, when price tested the upper part on March 22 and on June 22, since that moment we can see that oil is just in a bearish movement from that point. In the current situation, the market is getting stable overall relating with the energy crisis. In normal conditions, if we are going to check the historical price data, we may see that this top here that corresponds to $86, it means that it was in normal conditions. Then we may see also 77 and the price was even lower. So the price is coming from the lower part of the structure. Look at where the price is coming. When price was testing the highs during the previous times, the market was not in normal conditions. So look at also during the previous times in October 18, as you may see, 2018, the high was reached at 86.53. So overall, we are in close to the market conditions that have been overextended before. These are not market conditions, not very good, let's say. It was related to something else at that point. But here we are dealing with normal prices. What I see at this moment is that as long as the price will stay or will develop below 89.25, we are talking about Brent oil on this chart, so just not to make a mess with the other ones. We are talking about Brent oil, then the chances are very high that the price will continue to move lower. So this is what I'm looking at. I don't want the price to bounce above 89.25 that we are looking at here. Considering the current situation, price is close to a structure area. Just let me make it more visible right now. During the previous days, price tested this zone, 89, a small double top. We can see that we have a breakdown from the structure, and price is just testing the structure right now. So the chances are high that we may see a move down from this point. Even if price is going to test the top, the chances are very high again that we may see another bearish movement. However, as long as price is just developing below the current structure, the chances are high that we may see another move is beginning close to 83 and probably lower if price is going to break this. So another good target could be close to 81 and 83. So these are the areas that I'm looking at for the price to continue moving lower. So let's see, this is the overall scenario that I'm looking at for oil. The next one that we are going to look at right now is the dollar euro USD. This is getting more interesting and also more difficult for trading. As you may see on the left part of the structure, we have on the daily chart very strong structure that stopped the price. Price is above the structure level, however, it doesn't mean that it can move down, so everything will be related with the statement, with the monetary policy statement from Fed. The chances are equal on both sides, but considering that price is not moving up, it means that the market is not ready to push further for Euro USD. So overall, it is needed a price correction. During the previous time that I was looking at for this analysis, price completed this type of diamond pattern, top pattern, as you may see. It broke up from the pattern, and here we have another pattern that is taking shape. Overall, it means that the corrective pattern is expanding and the market is not sure yet for the next movement. So let's be careful. It's not that easy as it seems, so we can't bet at all about the Fed decision, how they are going to support the economy, or what further steps they are going to take during this moment. But what we can see is also this potential pattern. So it's not a clear triangle pattern. However, it is taking this shape. It's a bit ugly overall. Let's see the monetary policy statement and the Powell speech, and the chances will be high for the bullish movement if price is going to break the top of the pattern. Let's say above 1.0930, we may see price to continue higher. And I would say that some good targets that we may take, we can look at close to 1.1. It makes sense because we are dealing with psychological price areas right now. And another one that I would like to look at would be close to the upper part of the structure, 1.150. So this is going to be the extended target. If you are going to look at back on the left side, this is close to March 22, and also we are in a strong daily structure, so price can finish the bullish movement here. This is the scenario that I'm looking at for the bullish move. If price is going to break below the previous pattern, so we are going to see the breakdown from this pattern, then definitely the first movement will be the bearish one and probably very aggressive. So only from this point, probably we are going to have 300 pips profits at this moment. So let's see. It looks interesting, but it's also very risky considering the current market position. Just one moment. The next one that I'm already looking at is New Zealand dollar. I was looking at this with two possible scenarios. It is not easy at all. As we know, New Zealand USD is a bit like a boring pattern. It doesn't move very fast. It makes slow movements, but it tends to continue the movement within that move. So it's very strange. I don't like this too much. Many traders like to trade this. But from the technical perspective, as you may see, price was close to June 22 high, and here we have another structure high that this is dating back in April 22. Overall, if we consider only the structure areas, we may see that New Zealand dollar is undervalued related with the US dollar. But what is happening on our part of the structure? So in our part of the structure, we may see only that price created one move down, one move up, and the chances are that we may see the price to test the lower part of the structure again. The bearish movement probably is going to happen only if Fed is going to show that it is supporting the economy. This is the fact that I'm looking at for this pattern to develop more. If I'm going to delete these trading scenarios right now, what we may see is only this picture here that is normal as part of larger correction, and price can come close to this point. I'm not expecting the price to move down lower than 0.62 for the moment. However, we have to be very careful because also the pattern near to the top is very, very ugly. Just one moment, I had two scenarios for this that I was looking at. The first scenario is this one. We had the first movement. We had the first movement that was reached as an ABC movement. And the second movement that I'm looking at for this part of the structure, just a moment. The second movement here could be another ABC movement that contests the bottom. However, exists also another scenario because none of the movements is already confirmed. We are in the middle of the storm today. If I'm going to delete this, I was looking at also for a potential price development that was developing in this way. So this was the second one here. As you may see, the potential development was looking for this pattern here. I shared this also as one of the analyses. Considering that price is already creating this move, I think that probably we are on the first scenario that I was looking at. If this is going to be true, then we are going to look at a strong bullish move from Fed today. However, we have to be very careful because the patterns can be invalidated easily, considering that we are talking about Fed and what may happen during FOMC. But I think that we may have some chances as long as the price will not move above this area here. Just one moment. As long as the price will stop to increase above this point, the chances are very high that even if price is going to test this zone, 0.6470, it can move lower again. Once the price will bounce above this area, we have to be careful because it's going to increase more. At least we have something that we can focus our trading, and this is a very critical zone in my opinion. So just focus for the bullish and for the bearish move in this way. However, FOMC can validate and invalidate these structures very easily. So be careful, in my opinion, just trade after FOMC. During FOMC is one of the riskiest decision that you can take. It's not good at all in my opinion. So it is better if you just stay on the side because it is a trading decision even when you don't take any action at all. So if you decide not to trade during the FOMC, this is also a trading decision. At the end of the day, what is important is that we need to protect our equities. So this is what I'm already focused on my daily trading. Another chart that I'm looking at is GBPUSD. As we all know, all the market is focused on these financial instruments, so EURUSD, New Zealand USD, GBPUSD, dollar index, everyone that wants to trade the USD dollar today. So what is happening? If we are going to look at this part, from January 18 until now, we may see that price is in correction, so it is not moving at all. All the focus during the past days was only on FOMC, so price moved up and down with very small steps overall. We can see what is clearly happening. Today I shared also a potential scenario for GBPUSD. I was looking at for this triangle pattern, a 4-hour pattern. Probably it is not a clear one because the base is not clear yet, but we have some scenarios that probably we can take with this triangle. As you may see on the left side, we have a very strong resistance area that is coming from this part of the structure. So on the daily, it looks more visible. It's more visible here. We can see how strong it was before. Price reacted very strong, close to 1.2650. Very strong area, as you may see. And here we have our pattern. So the price already stopped close to 1.2450 approximately, and it is not moving up at all. What may happen is that we may see this 1, 2, 3 movement before the next bullish move. And if this is going to happen, it will be a solid structure for the next bullish movement. However, this is one of the scenarios that I'm looking at. If price is going to create this bullish structure, what we have to be careful on the lower time frame is that if we are going to look at and to break down this part of the structure, price is creating this triangle. As many of you may know, the triangle pattern or the contracting triangle pattern is a pattern that is created when the market is not sure at all about the next move. So the price tends to create up and downs, and at the end of the day we see the price to contract, and only the breakout will define the next movement. So this is how this pattern usually works out. What may happen today is that we had two possible scenarios to trade. The first one, we had three possible scenarios from the ideas that I shared today. Here we have the pattern. This is how it works. The first one is within the pattern, how you can trade. So you can anticipate the movement. Let's say if GBPUSD, you expect the price to increase, you can trade within the pattern and you can target the target zones only within the triangle pattern. The bullish movement will happen only with high volume during FOMC, so I'm not expecting the bullish movement to happen before FOMC, but also the bearish movement will happen only during FOMC. So the outside parts of the movement that I'm looking at are part of FOMC event, and within the pattern is part of the contraction that is happening before FOMC. These are the potential areas. If price is going to move down, I would like to focus on some fast movement, so probably we can increase the target zone close to 1.2170, and another one could be close to the previous structure, 1.21. If price is going to continue to move lower, then we are going to look at for a deeper movement that can test the base of the bigger picture. So let's see, because everything will be related with FOMC today, it will be very speculative. I don't think that we are going to have many trading opportunities today, because the market will wait for FOMC, and during FOMC everything will be very, very fast, I guess. So let's see. One member from the chat is asking about gold. I would say that it is better to stay out from gold today. It is not in the best position. It will be speculative more than the others. What I have observed in gold is the problem that just one moment. is the problem that gold during this period of time was invalidating the structures one by one. And look at what may happen here. We have to be very careful with this structure, how this is taking the shape right now. Look at price. We are in two possible scenarios. On the 4-hour, we have a potential head and shoulder pattern that is taking shape. I can't say that we are in a head and shoulder pattern. The problem is because if FOMC is going to be soft during the press conference, then we may see the bullish movement at this point. In my opinion, what we have to focus is that we have to wait for FOMC to finish. We have to see if price is going to break down from this potential head and shoulder pattern. In this way, we may see that price will confirm the bearish movement, and after that, when everything will calm down, we are going to ride the bearish market. So this is overall what I'm looking at for this part of the structure. Until FOMC, I don't advise at all for any one of you to jump in gold. It's very, very risky. It can create both moves very easily in the bullish and on the bearish side as well. So let's wait for price to move lower, and after that we are going to look at what is going to happen. If you are going just to wait for price to break out from this pattern here, look at the trading possibilities that you may have up to the bottom of the structure. So just be patient and don't try to catch the trend from the top. Sometimes it is very difficult, it's tricky, and you should have a well specified trading plan here at the top where the price is developing. So if price is going to increase more, then you should accept also your stop losses if gold is going to break the top of this pattern. So let's see, because everything is related with FOMC today. Just one moment. Another member is writing on a TradingView platform. Hi everyone, please advise on the trajectory of most yen pairs as most seem bearish. I can't say that many of the yen pairs are bearish or bullish. I would say that for the moment it is better to stay out from the yen pairs, and probably I will try to create another live stream with focus on the yen pairs. For the moment, we have to see what FOMC is going to bring to us today. That is very important for the coming movements. So if FOMC is going to be bullish today, we are going to see also for dollar yen, to change the trend, because it is a very critical point. But we have to see what is going to happen today. And definitely I will create any live stream about this topic. So hope you guys enjoyed this analysis for today, and I hope it was useful ahead of FOMC, because we all know that it's very difficult to trade during FOMC, or at least to have an opinion, a second opinion. Don't forget to press the like button and to subscribe as well. So I hope to see you all on the next live streaming. Thank you. Bye bye.